Warning bells were being sounded on social media today about CEOs and other public company insiders selling their stocks in mass. But what's the real story behind the data there, and should we worry? We'll talk about that. We'll also cover the major stock market storylines of the week, and I'll give you an update on my public stock investing portfolio. So let's dive right in. Today, making the rounds was a viral tweet from this account showing data from the top 200 insider trades this week by dollar volume. And it looks scary. They're all sales. And indeed, that does look pretty scary. You can go on a tool like FinViz here and see that this is actually true data. However, if you broaden this out beyond the top 200, you'll see there are lots of buys in smaller and mid-cap stocks, even this week. The other thing to know is that we're in the window right now just after a bunch of companies reported earnings, which is the window that insiders are allowed to sell their stock in. So it doesn't surprise us that we see a lot of insider selling, especially in large cap stocks, which have done pretty well this year for the most part. Also, this chart from Open Insider, which is what I tweeted back at this account, shows that if you look at the total number of buys and sells from insiders, it doesn't really look like we're at a major peak like we've had at some points in the past. This doesn't look that scary. And in fact, I don't really look at insider sells as a whole as a good indicator that we're topping. What I do look at oftentimes, though, is when we get a big spike up in insider buys, that's when I actually think this data can be useful as a signal, because it's often coinciding with a major dip in the market that becomes a very buyable dip. So that's what I like to look at. Again, there's this saying that insiders sell for a variety of reasons, but they only buy for one reason. And I think that's generally true. And that's why, again, I think we shouldn't be too worried about the fear mongering right now over the insider selling. So moving on. The S&P is going to finish the week kind of flattish, the NASDAQ as well. Small caps up a little bit this week. We did hit a new all-time high on the S&P yesterday, but we are dumping here on Friday on a low volume day ahead of the 3-day weekend. By the way, for you degens out there, the market will be closed on Monday for trading, so just keep that in mind if you've got any positions open. When we move over to crypto, it looks a little uglier this week. We had Bitcoin pulling back about 4% this week so far. Ethereum also pulling back by about 10% this week. So that's hit some stocks like BMNR and some of these other crypto treasury companies this week, which have pulled back as well. The dollar is flattish. Gold and silver doing well, up between 3 and 5% there. Now, yields, we have seen a little bit of move back up today in the 10-year and the 30-year yield. We're still trying to figure out if there's going to be a rate cut in mid-September at the Fed meeting. The market says about an 85% chance we will get that cut. But we've got 4 more key data points before that Fed meeting that will ultimately decide whether or not we get that rate cut. And we get a couple of those data points next week. So looking at the calendar, the JOLTS job openings data, as well as the non-farm payroll/unemployment report on Friday will be 2 of those key reports. The other 2 will be the CPI and the PPI in the following week. And so those will ultimately, I think, tell us whether or not we're going to get that Fed rate cut. Other news, though, of course, the big story this week was Nvidia earnings. It was like the Super Bowl for investors, basically. Nvidia reported another strong quarter of revenue and earnings growth. We have seen some deceleration. Like a year ago in the second quarter, Nvidia was growing revenues north of 100% on a year-over-year basis. This came in at only about 55% growth. Now, still very, very robust growth. And if we look at the estimates for this year and next in terms of revenue and earnings, it still looks pretty good for Nvidia. So earnings growth expected to be of around 50% this year and as much as 40% again next year. So that's not too shabby, especially for a stock that's only trading at around 30 times forward earnings. So we can debate the AI bubble over and over, and maybe I'll do a video on that soon. But Nvidia, pretty solid report overall. The stock was flattish after the report, and we'll finish the week probably down around 2% unless we see a major swing here in the last hour of trading. There were some other earnings winners. So some of the standouts this week were companies like Snowflake, as well as MongoDB, which are also benefiting from the AI boom, particularly on the software side. So they're seeing acceleration in some of their cloud offerings. Both of those companies were up between 20 and 30% after reporting better than expected Q2 results. Now, today, we also saw strong results from Alibaba. That stock is up over 12% today because they reported a massive acceleration in their cloud business due to AI. Their cloud business was growing around 18% last quarter. This quarter accelerated to 26% year-over-year growth. So I think we could see Alibaba starting to really make a move higher here, as we have seen other Chinese stocks participating this year. And we have the K-Web and other Chinese indices up nicely so far year to date. But we've seen some pretty big moves lately from stocks like NIO and Tiger as well. And now Alibaba, with this cloud growth acceleration, could become a bigger and bigger AI story on the Chinese stock side as well. It wasn't all good news in earnings this week. We did have Marvell, which is also doing quite well. They reported revenue growth north of 50%. In fact, I think it was around 58% revenue growth in the quarter, but that wasn't enough, apparently, for investors who had expected more growth on the back of AI. However, Marvell's results, even though they came in line with expectations and the stock is down 15%, still performing pretty well overall. It just shows you how much of an expectations game this whole earnings results and earnings reports can be sometimes. Now, there were some political headlines, of course, that affected the market this week. I mean, when do we not have a political headline affecting the market? The US Intel deal was finalized, and a lot of people were kind of losing their minds over this. People were like, oh, what are we, socialists now? Are we, the government taking stakes in companies or, forcing stakes in companies? What's happening? A lot of people thought that somehow the US government was getting a free stake in Intel. But if you look at the details of the deal, just go pull up the Intel investor relations site and look at the press release on the deal. The US government is getting a 9.9% stake, but they're paying almost $9 billion for that stake. By the way, the government gets no board seats and no governance rights. And so it's not like they're going to be controlling everything that Intel does from the boardroom, at least not at this point. And the government did actually use some of the grant funds from the CHIPS Act to help fund this investment, which I think does help the government's financing of this transaction. So honestly, I thought it was a pretty good deal for both sides. Intel is going to get some fresh capital, a shareholder that will hopefully, be very amenable to any of the decisions they're making. And obviously, Intel's got to keep the foundry business in the US as well, which helps from kind of a domestic chip supply standpoint. So overall, I thought it was an okay deal. Now, obviously, we don't want to see the government getting involved in every company out there or demanding stakes in every company, but I thought it was a little bit overblown. Now, we are seeing some nervousness as well about the Trump administration firing a Fed governor. The question about Federal Reserve independence and board independence still remains an open question out there. And if anything, it's starting to look like the Fed is losing some of that independence. However, again, when you look beyond the headlines, potentially here are some issues with this Fed governor with some potential mortgage fraud issues. We don't know if that's actually true or not. It's been alleged, so we got to see how this plays out. This will probably play out in court. But that is notable, of course, when it comes to monetary policy and fiscal policy continuing to be intertwined. Moving on to some of the other individual stock news and stock moves out there. This week, we continued to see strength in cannabis stocks. Now, this is an area that's got a lot of rumors around it. If you zoom out and look at the long-term chart, obviously, cannabis stocks have performed very poorly over the past few years. It's been like Charlie Brown with the football. We have not seen the regulatory catalysts like rescheduling or safe banking get passed in the last 4 or 5 years, even though they've been rumored time and time again. Now, we are again in a period where the rumors are swirling that the Trump administration or the DEA could reschedule cannabis to a less severe class of drugs, which would help some of these publicly traded cannabis stocks. Maybe they could relist to the NASDAQ. Obviously, the rescheduling also reduces some of their tax payments because of some of the weird rules that are around companies that deal in illegal substances. So there are some positives that will come out of these regulatory moves if we do see those regulatory catalysts play out. But again, they're still just rumors. We don't know for sure, but it is notable the strength that we've seen off the bottom here in cannabis stocks. And they continue to be a strong area of the market in a time where the market's been, a little bit choppy. We've also seen meme stocks still making some moves out there. Opendoor has been pretty volatile. It's up nicely over the past few sessions. We saw the CEO of Opendoor buying $128,000 worth of stock. So that's nice to see a commitment to, the potential long-term value creation there from the executive side, which we haven't seen at Opendoor in a long time. I will hopefully maybe do a video on Opendoor at some point. Stock may be a little bit ahead of itself in the short run on some of this meme stuff, but a potential turnaround is a real potential driver for that stock in the longer term. So we're going to continue to follow that one. We also saw some sympathy moves in some stocks like GoPro and Krispy Kreme. A lot of those have been pops and flops lately, but it is worth watching some of these meme type moves in the market, especially if they start to get more broad. We saw Kohl's a couple of weeks ago. Of course, that one again popped and flopped. So the staying power of the meme trade hasn't really been there outside of Opendoor. We've seen some reports in retail and some interesting moves there. Some viral things moving stocks like Gap and Ralph Lauren, things like, the Taylor Swift engagement also moving some of the stocks in that sector. Gap overall reported okay earnings. Their athleisure business looks a little bit weak. The other parts of the business doing well on the back of some viral campaigns. I actually had a small call position here that I closed out today. We can talk a little bit more about that, but I didn't quite get the move that I was looking for there. But like I said, we have seen some interesting moves in some of these stocks off of viral social media trends. We had, some of the jewelry companies going up on the Taylor Swift engagement news. Not really a trade that I would make personally, but again, if you're a trader out there, some of these things can move pretty quickly on headlines. We also saw a big merger announced, and I expect that we'll see more of these in the fall as we move back into a non-summer time period and people come back from their vacations. But Keurig Dr. Pepper stock was actually down on the announcement of acquiring Peet's, JDE Peet's, which is a huge coffee holding company with a bunch of different brands, including Stumptown and Peet's and a number of other international brands. KDP paying a 33% premium to that stock, though, and perhaps investors thought that they were overpaying. So if you look at KDP's performance this week, it was definitely on the stock loser list. We saw another transaction, though, that was pretty interesting with EchoStar, which was a beleaguered telecom company. Obviously the stock's been very choppy over the last few years, but it was basically a double this week. It was up 100% this week on news that they are in a $23 billion transaction to sell some of their wireless spectrum to AT&T. So a very interesting deal, unlocking value there at EchoStar, which was a heavily shorted stock. As far as other macro news, we did get the core PCE inflation data today as well. That was basically in line with expectations, 0.3% month over month growth in the core PCE inflation metrics. That's 2.6% on a year-over-year basis. Again, pretty much in line with expectations. Didn't seem to move the market's odds of a rate cut or anything like that. Looking ahead, though, I mentioned the 4-day trading week. We're closed on Monday. We do get the important jobs data with JOLTS and NFP on Tuesday and Friday. We have also some ISM manufacturing reports and ISM services reports next week. We do have a little bit of earnings on the calendar. So we have a few companies like Lululemon is one that I think could be interesting to some investors because it is still trading near a 52-week low. It is actually trading at one of its lowest price to earnings multiples ever outside of, say, the GFC back in 2009. However, we did see weakness in Athleta at Gap, and I think there's just general weakness in athleisure overall as trends shift. So I am a little bit interested to see how Lulu, if they can continue to put up solid growth. Right now, they're kind of flatlining in domestic growth, but they're still growing pretty aggressively internationally. But there is a possibility that domestic growth could go negative in the short run, which could continue to weigh on the stock. So I'm not in that stock right now. I know some investors are seeing value. We've even had Chris Camillo doing some social arb stuff, saying that some of Lulu's product lines are actually selling really well right now, and he's in the stock. Again, I think it's going to be a battleground bear versus bull stock, but it's definitely one to watch as it is trading near 52-week lows still. We also get Salesforce, we get Neo, Zscaler, American Eagle, which has been in the headlines because of viral stuff lately with their campaigns, marketing campaigns, DocuSign, Macy's. So definitely some names of note, but we're past the broadest part of earnings season. So that brings me to my portfolio, which you can see a snapshot here as of this morning. Since I last shared this with you, it's up a little bit. It's up about 3,000 since I last shared it with you. If you recall, I started this with a fresh 100K that I rolled over from an IRA in October of 2024. So it's been a little less than a year. The portfolio is up about 32% since inception versus the S&P up about 12% in that time frame. So adding some alpha so far, good news. And I have been taking profits on some of my positions that I'm up a lot on, like Wayfair and Block over the last couple of months. So I have been taking some profits here and there. Heavy cash position right now with about 54% of my portfolio in cash. I'm just not finding as many opportunities as I'd like to right now, but I do have some interesting setups here. PagerDuty, kind of a merger arb situation that I'm in right now, looking potentially for a buyout there. I've got a SPAC that's announced a deal that could potentially be interesting in the robotics sector here in the portfolio in AACT. We'll see how that one plays out. They're still looking to complete that deal before it starts to trade publicly. And I do have some very small call positions. I do have a small call position in Alibaba, which was well-timed, and that's up nicely today. I closed out some gap calls at a small loss. And I do have a sympathy play on Alibaba and Chinese AI as well with VNet here. But again, it's a very small position. So that's basically what's in the portfolio. And I'm going to be hunting for more ideas aggressively because I do have a large cash position. So I would like to find more intriguing opportunities out there. And hopefully we'll get more of those as we get into later in the year. Maybe we'll even get a correction that's larger than 2 or 3% in the indices at some point. But that's basically it for now. Hopefully this was helpful. Let me know what you'd like to see me talk about here on the channel. Let me know if you've got any follow-up questions. And hopefully you aren't too worried about that insider selling stuff that we talked about earlier. Hey, enjoy your weekend. Enjoy Labor Day. I will see y'all next week. Cheers.